So one of the question which comes from one of our client is, Naveen, you've discussed a lot about CAMS as a growth story for next 3 to 4 years, but don't you think that it faces threats from products like ETF, small case, and wealth desk, etc., etc.?
So I think let's first discuss ETFs threats. Sorry, let's not use the word threats first. Let's first discuss ETFs and small case, then the mutual fund industry, then CAMS, and then talk about the threats. Right? See, ETFs are here to stay very clearly. Right? There is a place for passives, maybe in everyone's portfolio. I don't know, but end of the day, I keep telling investors this: passives are very boring. Okay. An investor needs to understand that if he needs to get into passives, he needs to learn to filter out the noise and say, I'm not interested in the markets anymore. Right. So if you are telling me that ETFs will take over the market, then it also means demat accounts will start shrinking. You cannot say demat accounts will keep increasing and passives will take over the market, because these are counter cyclical trends that you're talking about. I still feel passives have a role to play for many people who think I don't want to get involved in active management at all. And I think in a country like India, that may not be the right thing to do, but if it suits an investor psyche, they should do it. I don't think small case is for everyone, and I've always maintained that. I mean, you can shop for mobile phones on Amazon, right? You can shop for mobile cases on a platform, but I really don't believe 550 so-called themes, or maybe even 5,000 so-called themes, you can shop for on small case, right? So I'm not. It's great in a bull market, all of this will work. And I always say this, do remember this: there was a company which was a small case equivalent in the US. In 2019 they filed for bankruptcy, right? So there is a reason why all of this happens. It works beautifully in a bull market. If it works, great. If it doesn't, I don't look at it as a threat. So I still think mutual funds are here to stay. They, in India, people need to remember that getting access to a professional fund manager for retail at the cost that SEBI has given you is mind-boggling, right? In US, most of the mutual funds are still available at 2x the fees of India. So I don't really believe mutual funds are at threat. As a result of which, I don't believe CAMS's business is at threat. Second thing, there is no supply side, right? Where is the competition? You have KFinTech, which has its own issues to deal with. They are coming out of it. But CAMS is a proxy monopoly or a proxy duopoly in the market leader. And there is a lot of room for them to grow, because these relationships are B2B relationships. They're extremely sticky. I'm not saying you're going to get 25% growth rate, right? That's not what I'm saying. I'm saying you're going to get steady 13 to 15% growth, right? So along with that, you're going to have significant operational leverage, along with the fact that there are some option-based plays that people don't talk about today, because you don't know how things are going to pan out, like how account aggregator takes shape in India, right? And that is a very, very nascent part of the ecosystem that we are in. So and it has significant legs, and CAMS can be a significant player there as well. So I still think you have a reasonable runway for growth, and I don't believe all of these so-called threats are real threats to the business of CAMS. Having said that, I think you, as an investor, you need to understand the expectations that I'm talking about. I'm not saying you're going to get 30% growth, right? That if that happens, that's more so luck rather than what you price in from a base case scenario. We as analysts price in a 13 to 15% CAGR growth, which at the top line, along with operational leverage, that could work out significantly, meaningfully on the bottom line. So that's how I think about CAMS.